Welcome back to my daily report market analysis videos with me, Richard Perry, market analyst, on Thursday the 2nd of April. We're going to look at euro-dollar now, which has been under increasing pressure actually in recent days, falling away, breaking this uptrend, a succession of negative candles, lower highs, lower lows. It's just fairly much set up for further corrective momentum, really. If you look at this with the RSI falling away under 50, MACD line's about to bear cross lower. Stochastics are bear crossing lower now. So this momentum of the move is continuing. It's 30 pips down on the day. It is the worst performing of all the major currencies. And I think it's going to continue to be so if you look at the fundamentals surrounding the arguments over the potential for corona bonds in the Eurozone. Big north-south divide developing again, it's potentially going to be a continued drag on eurodollar, and technicals are reflecting that. You've got this run here of lower highs, lower lows. As I said yesterday, you've got this completed top pattern effectively underneath 109.50, but I mean, I suppose if you went a bit more conservative, you'd say underneath 109.25, but even then you've broken that as well. So it looks as though that rallies are being seen as a chance to sell now, and again around that 109.50 area up towards 109.70 is a pretty strong neckline resistance building up. That downtrend currently comes in around the 109.70 mark as well, along with the what is now, I spoke previously about this rising, had been a rising 55-hour moving average, rolled over, became resistance. Having been supportive, it becomes resistance, and again that is now flanking the downtrend 109.70. So you'd say that is a pretty good gauge of how the market is looking at the moment, that 55-hour moving average. Watch out for that. Negative configuration with RSI on the hourly, failures around the 50 to 55 area on RSI, failures around the neutral point on MACD, and looks to be pressurizing lower. Initial support 109 figure, 108.85 then starts to come into play as a little pivot, nothing too decisive as that pivot, but essentially on the hourly, on the daily chart, you can see 108.75 was an old key low from October, and then 108.35 is 23.6% Fibonacci of the big sell-off. So these levels are now being tested, and given the fact that we're sort of failing around the 38.2% fib today, pulling back, should see 23.6 at 108.35 area. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars. And I've got a payrolls webinar tomorrow that you can join. Just go to the website and click through. Thank you very much.